The US markets has started to sell off in the past week with Apple down 6%, Nvidia down 13%, and even the AI darling SMCI plunging 23% in a single day. There are several reasons for the sell-off to continue because firstly, when you look at it, AI and tech stocks in general have gone up too fast, too high, and is primed for a correction. Second, the US Fed has done a sharp U-turn, okay, from the agreed three rate cuts this year, 2024, and now they are thinking of pausing the rate cuts again until maybe March 2025. And this is simply due to a lack of progress to lower the inflation back to their 2% target. Lastly, of course, is the geopolitical tensions that seem to involve more and more nations and divide the entire world, right? And like what my wife said, these wars are caused by men, nothing better to do. Laugh out loud. So anyway, we all know that market downturns are the best time to snap up stock market bargains. So hence, in this video, I'm gonna share three interesting US stocks that are on my watch list. First up, we have Netflix. Their share price has dipped recently despite them reporting solid subscriber growth even after they increased the subscription prices. This could be due to two main reasons. Well, one of it is that the Netflix gave a soft revenue guidance for the second quarter. Okay. And second, it will stop giving quarterly subscriber numbers from the next year onwards. So investors are afraid that the lack of visibility into the customer numbers signals a potential slowdown in their growth. However, that's why I'm actually bullish on Netflix because if you look at the past news, right, where Apple also ended the reporting of their unit sales, like for example for iPhone, for Mac, and all that in 2018, it was a resounding success to date. So this can also definitely work for Netflix as well. And moreover, I believe that Netflix has the pricing power to keep increasing prices and people will still stick around. Because when you compare Netflix versus the current, movie theaters, a movie ticket costs $15.50 in Singapore, and the monthly subscription that I'm paying right now is only around $20. So as long as you watch two shows in Netflix, you are getting more bang for the buck already. Anyway, so on top of that, right, Netflix has a massive content library and a strong brand reputation where movie producers can go up to them and say, "Can you distribute my movie in Netflix instead of the usual movie theaters?" So this loyal subscriber base, and I'm one of them, right, is a key part of Netflix economy mode, and this can keep churning out free cash flow for the company, and they can use it to reinvest in more breathtaking shows like the recent Physical 100. All right, for the second stock that I have is Tesla. So let's switch gears and talk about Tesla now. According to this CNN article, okay, Tesla is the worst performing stock in the S&P 500 index, and many analysts are saying that it has more room to fall. So why am I picking this stock, right? It's easy to understand why Tesla is somewhat facing a triple whammy, okay, in my opinion. Falling demand from all the recession fears, heightened competition in the EV space, barrage of analyst downgrades like this one right here, where the analysts give a price target of $23 and say that Tesla should trade like the Ford's valuation. Okay, despite all this flake right going around surrounding Tesla, I personally like it for two big reasons. Firstly, Tesla has been loss making in the early days. Okay, is because they're building up their factories, and pumping in a lot of capex into all this stuff. But right now, is actually extremely profitable after gaining the economics of scale. You can literally see how fast the free cash flow and the net income skyrockets, right, once the momentum kicks in. Although you may say that, going forward, the poor demand may affect their operating income and their sales may fluctuate. They are still likely to be profitable in the near term, and they can anytime cut prices, to increase demand. As long as there are people buying Tesla cars, I'm not so worried. Secondly, and that is the part where most people get the idea of Tesla wrong. You can specifically see from the Elon Musk tweet over here saying that it is an AI slash robotics company, not a car or EV company. Lastly, we all know about how Elon Musk is not just talk when Tesla has already unveiled this advanced and realistic robot called Optimus Gen 2. So investing in Tesla is not just about EV cars, but also the optionality part where they have the AI, they have the humanoid robots that can really become a game changer in future. Finally, I'm keeping a close eye on Alibaba Group. Yes, you hear me right. Okay, so this company itself, right, their stock price has taken a significant hit in the past 2 to 3 years, largely due to concerns about the government regulatory risk, the bad shape of Chinese economy, as well as the stiff competition from their peers like Pinduoduo, TikTok ByteDance, and more. However, okay, personally, I feel that Alibaba is not just a giant in e-commerce, but also owns a whole big ecosystem of subsidiaries, such as their logistics infrastructure player Cainiao. Every time I buy something from Taobao, right, it will arrive with the Cainiao label on top of the parcel. Okay, and not to forget the fast-growing cloud computing division, Ali Cloud, where they own a 30+% market share at the moment and is lowering the prices now to maintain their lead. And moreover, if you look at the price to earnings chart over here, Alibaba is trading at their lowest PE ratio of only 12 times in the past 5 years. I like this contrarian bet, okay, where everyone else is just super pessimistic or bearish on the stock. But this cheap PE ratio, right, tells me that the downside is somewhat limited. Okay, and on top of that, right, the Alibaba is already giving a modest 1+% dividend yield as a safety net. And last but not least, the high profile management. Founder Jack Ma and chairman Joey Xia, alright, have bought a combined 200 million USD, 200 million worth of shares in the recent months as the stock plunged. So these share purchases added another vote of confidence for us retail investors, right? That the business is undervalued now and the turnaround is probably underway. Before we end off, if you find the video helpful, I would appreciate it if you can help me to tap the like button and share the video so more people get to know about this video. Next up, don't forget to check out this video over here if you have another few minutes to spare. And I will see you next time. Thanks for watching and ciao.